Friday the 9th of March, time of recording 0941 hours. We're here with the pound Canadian dollar, and I'm on a weekly chart here. You can see that it's been in a downtrend, and it's for the last almost 2 years. It's been in this sideways consolidation pattern. We've got signs here that something may be shaping up on the shorter time frames, but I wanted to start out on the weekly chart just to show the much bigger perspective. So we've got hook in on percentage K, on percentage D here, red percentage D, percentage K pointing down. So that's good. MACD in negative zone. So it looks like we could be getting ready here for a new cycle down. We've got this this very bearish engulfing candlestick here on the weekly chart, which is good as well. It's a bearish signal. So if we now nip down into the daily chart, we can see on the dailies here we've got recent crossover to the downside. And if I zoom out, let's just get a better grip on this this sort of triangle pattern that we're in. Let's just draw a new line in. Okay, so on the very large time frame here, we're in this triangle pattern, but that's not the setup either. That's just the potential for the cascading effect that could occur. Let me just get rid of this line up here. That could occur if my shorter term setup really sees this price breaking out in a big way. This is hopefully going to be a test of my new butterfly effect theory, being that the what starts on the small time frames and small fractals can really kick over, producing something major on the larger time frame fractals, aka the butterfly effect. So let's see. But we can see here we've got percentage K, percentage D, both pointing down. Moving average crossover, so that looks good. Here on the 4-hour chart, you can see it's been interweaving. The short-term moving averages have been interweaving with the 200 in what is a sideways correction. But you'll notice here, obviously, the obvious picture is the head and shoulders top pattern, signified by our high here, moving down to this low here, which is then retracing up to put in a lower high here. So this is my proposed wave 1, and that's my proposed wave 2 correction. And the neckline of this head and shoulders top pattern, there's the left shoulder, there's the right shoulder, there's the head. The neckline is connecting these two lows here. We're getting a break there, but that's almost certainly a fake out. If we zoom in, there's my alarm starting to trigger. If we zoom in, we can see that the neckline is being broken as we speak. However, the news release today for the Canadian dollar isn't until midday, so almost certainly this is attracting in some short traders to mess them about when that news release happens later on, possibly spike back up prior to the proper breakout. So we're not going to get tempted with any of that skullduggery business that goes on. What we'll do is we're going to draw in our shorter term trend line here. We're going to make sure that that's been broken. That's essential. Let's just change the color of that. Make that red. So it's important that that's broken. That's our outer trend line for this sideways correction, which has been going on for the guts of nearly 2 months now that this has been moving sideways, putting in a high there, higher low, higher high, higher low. So now we've got the first sign of a change with this lower high, and now it's just put in a lower low, but it's at the trend line support. So so could get a bounce up from there prior to any move being made. Just zoom in. Okay, let's get the neckline. The neckline is quite handy because it's also a little support line in and of itself. Change the color here just so we can see it. We've got 3 contact points on it when we go down to the 1-hour chart. Let's just work that out. We'll change it to blue. No, we'll change it to green. We've got blue on that longer term. So let's go for green this time, green for go. Okay, and let's draw a horizontal line in at our key level, which is this low here. So we can see that the price is already through that. So what we'll want to see, this is a 4-hour chart, so that's quite handy. What we'll want to see, this candlestick ends at 11 o'clock. So if this can push on and be a nice clean break, then we can work off that candlestick whenever after the news release this afternoon. So any short traders moving into this market now are going to be subject to that news release. We'll wait until after the news release at 12 o'clock, just see what happens. Let the initial volatility get out of the way of that news release if it is going to spike up, and then obviously catch it when it comes down and breaks the low of this break candle if that were to happen that way. So we'll assess it better, at the time. That's just a hypothetical. So we'll leave it here for now. It's now 9:47 a.m. So we'll not be revisiting this really until after 12 noon. That's when the news release happens. So we'll pause for now and come back to it then. Okay.